Are we banking on a rally today? Well, except for Goldman Sachs, we got some good news in the financial. We'll cover that. Oracle, well, it moved $10. It just happens to be up $11. We'll talk about the growth there. AI, mentioned that AI buzzword. That's good for a couple percentage points. Love gets a new chairman. Elliott just kind of pushes Kelly out the door. No economic data, not much in ratings land, but we got a lot to cover. Sami Al-Bussad, 8:35, talk about some of his strategies. Let's get fired up, folks. It's Tuesday on Pre-Market Prep.
Welcome to Benzinga's Pre-Market Prep.
This is a volatile puppy here.
It's all about execution styles and strategies.
All right, good morning, traders and investors. A choppy overnight session. We're up 3.5 handles, 54.83, trying to get into that 5,500.
We need the charts, Joel.
Charts? No, we want to see you, Aaron. You're looking much more perkier today while there wasn't a Sunday night Lions game. So here, let me go and share my screen, entire screen. There we go. Boom, boom. There's your futures. Your buck. That's up only 7 cents, 101.59. Just quiet range there. TLT just pausing. Potential double bottom in there. Down 34 cents, 99.65. Crude in the red, 91 cents. You could take Morgan Stanley for that. Gold in the green, $1.40. Silver up just 12 pennies. Bitcoin, that's up $85, trying to recover from that bad week yesterday. The futures, they're trading at 57,500. I see some new names in the chat here, folks. If you're new to the chat, tell us how you came to Pre-Market Prep. Let's bring in Triple D, who I will admit, I stole my opening line from him. It's Manny Ayala's birthday. He's 39 years old today. Happy birthday, Manny. And you know why your birthday's also special? It's because it's my sister's birthday, too.
Wow.
My sister, Elise.
Shared birthdays.
Happy
Nothing better
birthday,
than
Elise.
birthdays.
She's a smart one. And you know what yesterday was? And I even forgot to mention Emily's birthday.
Wow.
It's a birthday extravaganza.
Happy birthday, Emily. Everybody's got a birthday. Nice.
All right, Dennis.
Birthday. It's your birthday. You all get a birthday.
Yes. So, Dennis, I stole your title.
It's okay.
Banking on
NBC steals her stuff all the time, so I'll let you do it.
Okay. All right. Let's go to the banks. Let's start. Hey, AB, we'll bring you in first. First, let's get the bad news out of the way with one bank. And we never talk about Goldman Sachs that much, but let's talk about it today.
Yeah, so this headline came out this morning, or actually last night after the close. Goldman Sachs to post $400 million hit to third quarter results as it unwinds consumer business. Goldman Sachs will pay a roughly $400 million pre-tax hit to third quarter results as the bank continues to unwind its ill-fated consumer business. CEO David Solomon said Monday at a press conference that by unloading Goldman's GM card business, as well as a separate portfolio of loans, the bank would post a hit to revenues next month. So all in all, it's obviously not great news, but at the end of the day, the stock is really what?
Well, the big headline here, and maybe we missed that one, is that there's going to be a 10%. They see trading revenue down 10% in the third quarter. So that is the real reason stock is trading down, because obviously they get a big portion, not as big as they used to be. They see investment banking doing fine, but trading revenue, they see it down 10% in Q3. So that was commentary from the CEO.
So yeah, Solomon said Monday that trading revenue for the quarter was headed for a 10% decline because of a tough year-over-year comparison and difficult trading conditions in August for fixed income markets. So you're seeing the stock down about $2, 1.3% here. So,
and again, it's the FINRA, bullet BS prints here. So we'll give you the update, Mark, because you get these 8 o'clock prints that you have to ignore.
Yeah.
We tell our listeners that all the time. At 8 o'clock, you get all these old prints from Robinhood hitting the tape that aren't in the current market. That's not bad though. It's $85.50 offer, which would put it down $3. About down 1%. 4.78.
Dennis, what do you have for a last print?
It's 83.79, but it's 84 bid. What do you
Okay,
have for the
so
last
you know
print?
what? I don't know if I'm getting did Trade Station get rid of the 8 o'clock BS
What do
prints?
you have for the last print?
83.79.
Yeah, 83.79. That's what I have as well.
Yeah, maybe Trade Station got rid of them.
Oh, you don't
'Cause I
see all the crazy prints going on?
uh
FINRA, 88.57s,
no,
88.50s,
no, no,
85.10s. Those are
no.
odd lots, though, mostly on GS. So it's a hard tell here. Do you show
Yeah,
odd lots on yours? GS trades with a lot of odd lots on retail because most of your retail traders can't afford
201. Yeah,
100 shares of
yeah.
a
Yep, yep,
$485 stock.
yep,
It's
yep.
probably just
You're
the odd
right.
lots in between. Yeah.
Yep. Well, I'll say a couple things, and I wish someone in the chat would have brought this up yesterday because you're looking at your upper right chart, and you had a big seller. It's like, now they're not as close as I think. You had a double top at 88.50, triple top at 88.55, and then oh wait, no, it is a quad top. I'm looking at the wrong chart. Someone was ganging up on this thing at 495, 496. That's history now, but we'll look at the downside here, and we are still well above that low from Thursday at 470, or excuse me, from Friday at 477. So that's your next major level of support. You hang in here, you catch a bid, 480, 481. Then in market rallies, I think you shrug this off with Goldman Sachs. Always when you start in the hole down on something, the first thing you're looking is the mark, and that mark is way up at 88.57.
And Goldman Sachs, if you want to bring into the big news, has other
Yeah.
headlines here. So if you want to talk the Basel numbers here from last night too. So Goldman came out with that commentary earlier on, but then we found out Basel information, which if you want to quickly go into that, AB, we'll talk it.
Yeah, so they announced that the bank requirements here. So let me get the exact headline
Dennis,
up here.
explain that term, Basil.
Yeah,
Well, we'll give so the Fed to reduce. Here's the headline: Fed to reduce big banks' capital hike to 9% in the latest Basel plan.
and it was
So this was from Bloomberg. It was up at 19%. So
right.
Basel put in place. Basel's been around, but they did all these adjustments after the financial crisis, increasing bank requirements there because we don't want to have another financial crisis. So they got more stringent. They come out every year with these capital requirements here. The original plan was calling for them to have 19%. Now they're talking about lowering it to 9%. So what that's going to do is loosen up capital for the banks. So this is actually really good news. So Goldman, negative headline with the trading, but this is a positive headline. So, but that's also affecting the big banks. So there's 8 banks basically affected by this. Wells Fargo, JP Morgan, which are trading up, Citi, Bank America. Goldman would be trading up as well on this news if it wasn't for the other commentary there. USB also in there. It's trading up. I have trading positions on almost all these. I pair trade them all together here after hours because some are going more than others. So I do have day trading positions on these that I will try to probably work out at the open here or if the pre-market works out. So that's the headline. That basically loosens up capital. You can read into that whatever you want. It might mean that maybe they can increase buybacks. It might mean that maybe they just have more capital to work with. Each bank maybe use that differently. But when you have less, capital tied up from Basel, it's going to, help those banks.
Yeah, and in the Bloomberg article, it talks about that the plan to be outlined on Tuesday will likely be subject to a 60-day comment period, and final adoption may not take place well into next year. And then Powell has said, and then it says there's no guarantee that individual banks will be satisfied by the smaller overall capital hikes, as industry members have cited a wide range of concerns from how trading risks are treated to how the proposals interact with annual stress tests. Either way, financials had a good day yesterday. I think the XLF closed up, I want to say like 1.3, closed up 1.5%, now trading up again in the pre-market. So financials doing pretty well here, at least compared to when you're looking at like the big tech stocks and stuff. You're seeing pockets of strength in other areas. Financials has been one of those.
All right.
On.
Yeah, a lot of technicals here. I'll just blast through a few here. For JP Morgan, full disclosure, I bought that a year ago in April, I believe. 222.07 is your 4-day high. That's about half of the bounce, too. You did print over that just momentarily. You had to be cat quick to get it. So I would want that to get back up to 222 today for, just if you had a day trade or a short term trade on. Bank America. Who cares about Warren selling? He was out there at 40 and 41. That's a big move in Bank America, up 65 cents. So if you're buying this off the hop, you want follow through. Next daily highs, there's in the 40, not much in the 40 handle at all. The big one, the big mover off this, and I think the CEO was talking, is Wells Fargo. This is a stock that we've talked about. It's had a big inside day yesterday. No shocker. That's trading at the highs of the pre-market session, which is 55.93. Another big move for Wells Fargo. You have to see if they're going to gang up at 56 on this one. If you were in there for a scalp, bind it under 54 yesterday. Nice round number like 56 could be in Wells Fargo. And is there any other banks you guys want to? If you guys want to take another look, we can move on from this. But if you guys want to technicals on another bank, just let me know. But there you go. All the banks trading up besides Goldman Sachs.
There you have. If we have any banks in the chat that people want to check out, we can do that real quick. Otherwise, we can move on to some earnings that we had. Really, primarily one company. We had Oracle come in after the close yesterday, and feel like this is the first time we saw like a good report in the last couple of weeks. It actually has held. And so Oracle last night reported, give me 1 second, reported EPS of $1.39 that beat the $1.32 estimate. Sales came in at $13.3 billion, beat the $13.23 billion, declared a 40-cent dividend. Cloud services revenue rises 21% year over year. So you had the both EPS and revenue beat here, and it looks like the guidance was pretty good here. Some analysts coming in this morning raising price targets. You had B of A raising the price target to 175. You had another bank coming in at 185. Either way, stock trading up $11 or 8% this morning to about 151.
And reported on the right day. Last night was a rip roaring rally in tech. We know we had a huge bounce back in a lot of tech names yesterday. So on any dip, there was probably going to be buyers. And this is why, it's like, obviously yesterday morning, we're in a different situation. We were up a bit, but we're like, maybe the rally fades. It didn't fade. It continued. And then you've got to analyze it from that moment in time. I mean, it's a continuous analysis. And that's why, you listen to PreMarket Prep every day. When we do the closing print, listen to those. If we're talking on Twitter, try to listen to those too, because we're constantly changing opinions. Because I would have thought, maybe we leak a little bit yesterday and then Oracle will be reporting into a tougher tape. But it didn't happen because of yesterday's rally. Then you got money managers like, oh man, now I need to buy stuff to chase it. They always think about them chasing. So what the market immediately has done influences, how these reports are going to go. Now, again, beats a beat, raising, doing good things. Stock was probably going to go up anyways. But I don't think it hurt that yesterday we had a big tech rally and that piggybacks. Just like last week when we were having the tech sell-off, you had a couple reports that didn't seem that bad, but they were hammering them anyways. This is the opposite.
Why did someone hit this down to 136.50 is beyond
and they bought it immediately. Like the dip just like scooped so fast, Joel, blink of an eye. Why do the algos still trade the reports? That's the better question, because they seem to be wrong all the time. Like, I don't know who runs these earnings algorithms, but they suck. So that's good opportunity for us. I love algorithms that suck because it gives you as a human being opportunities there. And sometimes maybe you just got to look and go for it, or maybe you got to be, take your shots there. It's hard trading earnings, but I tell you, these earnings algorithms, the people who run these things, some of them aren't very good. Whoever sold it down at 136 last night is having big regrets.
Yeah, we had talked about, the straddle price and, where it was going. And if you look at your daily charts here, there is a bunch of lows. I talked about the 137 area. You went to 136.50. If you just weren't out though there, if you just like, okay, I'm doing a blind shot, I'm buying 130, then you had absolutely no chance to get it. Then you had the rebound. Dennis, on that 10-minute bracket from 4 o'clock to 4:10, how many shares do you think traded?
No idea.
1 million.
Million shares right in that bracket.
Yeah.
No,
10.
wait though. Wait, I'm gonna argue with you
Okay,
because
let's
I don't
argue.
think there's probably 1 million shares trading after hours because the closing print would probably be in that bracket, and
Yeah.
all the other institutions that trade off the closing print would be in that bracket because that sounds like way too many shares
You're right.
for Oracle
You're
to be
right.
trading. So I
You're
think
right.
if you remove the first couple of minutes of that bracket, you probably get a better feel for it.
Oh,
So
very
I
good.
doubt it was 1 million shares that traded that.
Okay. What time? So that would be.
Well, the closing print, the problem is then you have all the institutions that match that keep coming after the closing print. So you have to remove all the FINRA blocks. Again, FINRA just screws up tape reading. It really does.
Good point.
Because you have so much off exchange crap that's happening that is late reporting because these trades are trying to go off the closing print. Well, get them out there 405. Like it's just and the transparency. And, we've argued this to regulators, me on behalf of the CFA Institute for years. The transparency in the tape is crap. FINRA. Oh yeah, half the trades happen on FINRA. We just put it all as FINRA. So on exchange trades, you can tell all the exchanges they're trading on: ARCA, NSDQ, BATS. You can see where that's happening. Off exchange is all the same. FINRA. If it's a dark pool, it's an off exchange market maker. If it's LiquidNet just doing some institutional matching, it's all the same. FINRA. Why, regulators? Why? Let's get some transparency in that FINRA tape so we can understand a little bit more of what is going on instead of trying to figure out, oh, that's Robinhood and having to talk to people. We'd actually see, oh, this is Robinhood, RH going by. Wouldn't that be good? More transparency, isn't that a good thing?
Yes. 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 Yep. Yep. No, but let's just. I mean, those levels I gave you for support just don't mean anything now. The pre-market high, after hours high, way up there, 153.75. I think that's still 250 away. If you're buying this off the hop, you want to see it get up to that area real quickly. Historically, this doesn't really fade hard off of the big. It kind of chops around for a few days. So the former old. Oh wow, this is blowing away the old time high. The former old time high is 146.59. Holy mackerel! So man, a lot of gravy on that. If you have a target in 151, 152 area, that was the target you wrote down last night, 6 months or 6 years ago. Well, you'll get an opportunity at it today. If you just want to let it ride and see if you have a gap and go off earnings, and then let it go. But also, they got a partnership with Amazon, which is not hurting things either for Oracle.
Nope, pretty good news when you got a deal with Amazon. Speaking of Amazon, we'll go to another Mag 7 big tech stock now, Apple, which has two big headlines to discuss. Of course, yesterday was Apple's Glow Time event where they announced some new products. You can look at the chart while the event was going on, and it was kind of all over the place. I mean, Apple dipped pretty hard, then came back late in the afternoon. So Apple announced its new iPhone 16 and iPhone 16 Plus, Apple Watch Series 10 with an updated design, a polished titanium option, and a new S10 chip. They announced all this stuff, really nothing like that noteworthy, to be honest. Like, it's kind of the same old, like, updated display, better battery life, better, they're talking about their in-house chips, which Apple's really excited about. But in terms of like actual features of these new phones, they talk about the mics will be a lot better, but nothing really that crazy that they announced during the event, to be honest. But the stock bought back up in the afternoon, and then this morning we got news that the Apple is getting hit by a more than $14 billion fine by the EU. So they have to pay that in back taxes, and I mean, $14 billion fines, a huge number, but for Apple, which has more cash on hand than any other company in the world, it can withstand that. So the stock's not down too bad this morning, but again, you had both those headlines on Apple.
Lots again to chew on here. I mean, is it surprising to anyone that there's nothing, that they're making the phone, making the camera a little bit better, making the microphone a little bit better? I mean, this is all they do on the iPhone. There's usually, you can say the Apple Intelligence, but I've argued for a while there's been no really crazy innovation since Steve Jobs is gone. Now, again, they're trying things. The Vision Pro, it just hasn't hit. Apple Intelligence is maybe going to hit, but is this, going to move the needle tomorrow? Probably not. I think it's a little bit of disappointment from the event. It didn't go down really on it, didn't go up any on it. People just like, it's kind of the same old story. Better phone, better mic, and whatever. We still like Apple because it's safe. We feel it as a safe haven. And they feel it as an eventual AI play too. I don't like paying 30 times earnings for it. I'd love it at 20 times earnings. I don't know if you're going to get it there. But at this point in time, Apple's just kind of in the middle of nowhere.
You know what? You just took the words out of my mouth. I was looking at this chart and I'm like, I want to have an opinion. You all know I'm really opinionated. And I'm like, this is in freaking no man's land.
Yeah.
I mean, you're not like, you're not like Google. Did you see Google? It's $7 below its August 5th low. Did you see that? You talk about relative performance is absolutely horrible. I just had to get that in there. You know what I do? The only good number, the only reliable level I could give you for the day, and you guys are going to be mad at me because it's too far away, is like I wouldn't be happy with, or I would have feel like rah new all-time highs here until this got above the double top at 225 and then established the bid there. I'm not talking about traded 24.97 and then closing at 22.50. I'm telling you, get to 225, get over 225, establish a bid at 225. But that's the way you look at it. On the downside here, I mean, you can look at the pre-market low, and the pre-market low comes in at it's actually an after hours low, 216.71. So that's not too far away. So $3 from the low of the pre-market session. Not much to say there in Apple.
Well, yesterday we talked about Boeing trading higher. You had some good news for Boeing for the first time in a while after the company announced it was going to avert a strike. And we kind of foreshadowed this and give it a day or give it a few days and we'll see, another negative headline come in. And we only had about 24 hours with that. Boeing's 737 MAX production faces new delays, according to a report.
No.
Here comes straight back to the bad news. All right, so the good news, we'll try to stay positive on Boeing here, the silver lining. You had a positive headline yesterday that brought the stock up more than 3%. You have a negative headline today, and the stock's only down about 0.5%. So all in all, Boeing is still trading higher on the week. But again, if you were getting all amped up and super excited about Boeing yesterday and buying shares, you probably don't love to see immediately after the fact another negative headline coming in on Boeing.
The next day, this company sucks. Bottom line, the company just sucks. They got to figure it out how to just stop, they don't hit timelines. They have planes falling apart half the time. This company could be so much better. I mean, didn't they switch management though recently?
I think they're still trying to find somebody.
No, Kelly Ortberg.
Oh yeah, right? Kelly.
Did they hire somebody?
Yeah, Kelly Ortberg is the new CEO. He was coming from.
You got to give him time, but man, there's so many, just loose bolts in this company here, pun fully intended. I don't know what turns it around because you think, okay, here's a headline, maybe there's support down here, there's value down here. Again, they got a monopoly or duopoly, whatever you want to call it, on planes, and they got lots of other things going on, but just screw up so many times. So that's the issue. The negative headlines continue to hit. Takes one day, gets another negative headline. This one ain't that bad because I just expect it. The one thing about Boeing is you just expect more negative headlines, so they don't hit it as hard as they used to. But just unbelievable the negative headline flow out of this company.
I think you caught some people too yesterday, because you had a huge, big red bar on Friday, right? And people looking for the kill, breaking out of the bottom of the range, and then, but I can't remember what was the positive news yesterday. They built a plane.
Averted a strike.
Oh yeah,
They made
yeah,
yep.
yep. So I think people there. I agree here with Dennis. This is like, oh, more bad news. Oh, well, maybe I could buy the dip on it. You're nowhere near yesterday's low, which was 161.11. Wow, did that even filled the gap yesterday too? So, if you're looking to buy this and another buck, or if you're taking a poke here and saying, yeah, the bad news from today is not as good as the good, or is better than the good news from yesterday, then you have a level to lean on. Of course, looking at the mark here, 162.91, that's minor resistance. But if you took it home long, then it's pretty good resistance.
All right. Over the weekend, I was driving back to Detroit with my buddy, and we filled up for gas. And he was talking about how cheap the gas was because it was like right around $3. And he was talking about how awesome it was, and I was like, well, it could be not so great news if gas prices drop too quickly. And we did get a headline this morning that Morgan Stanley is cutting its oil forecast. This is based on weaker demand from, especially in China. They're worried about oil demand over there. Slowdown similar to mild recession. So that's what I was explaining to my buddy. I was like, it's great for us that gas prices come down, but if they come down too fast, it's usually a sign of a slowing economy. So it's interesting kind of action because you're seeing the USO is down now another 0.9%. So oil's really been kind of a disaster the past, let's say, maybe 2 months or so. It's down, I want to say 20% from its highs midsummer, which all this to say basically is that the weakness in oil right now is basically due to concerns about a slowdown in the overall global economy. So while it's good news for consumers that gas prices are coming down, the backdrop of why those prices are coming down might not be as great. So Morgan Stanley getting a little bearish on oil here. And I'm trying to see, let's see if we see any action in those. I mean, you're seeing Chevron pretty flat, XOM, Exxon down a little, 0.3%. So oil prices again here moving lower on weaker demand forecasts.
It's been commodity deflation, and we've been talking about that too. Commodity prices are coming down. Commodity prices have been coming down for a while here now. And is it concerns about the global economy? Probably. It's like you look at these oil stocks, and they are value stocks big time here. Like even Oxy, you bring that one up, and Warren Buffett was loading up on this thing, 57, 58. But as soon as he stopped buying, and I've been talking about this on this show, as soon as he stopped buying, you got to say, nah. I'm like, you've been buying nonstop for 6 months between 57 and 60. Now you don't want anymore. Well, that makes me not want it either because you don't got the Warren Buffett put anymore. Even though he's in it, it's nice that he's in it. You can't just be saying, well, obviously he's full. He's full. Well, if he's full, that he's not buying anymore, so he's not lending support.
He might be selling. He might be selling.
I don't think he's selling, Joel.
No?
He's not selling. Joel just starts some weird. He's
no,
not.
I'm not starting
he didn't just change his mind 3 months later. Why would he's not selling?
Okay, he's not selling. He's not selling. Just like when I said,
he's
a long time ago, he was selling Apple.
Why would you think he's selling? He just bought it 3. Warren Buffett is not a day trader, Joel. And one, does he take a lot of losses? Is Warren Buffett, he ate the loss in what? One of those tech stocks, but that probably wasn't his pick. This isn't really his
Snowflake.
style of, I'm going to just load up Oxy for 2 years and start dumping it out.
It's been more than 2 years, and it hasn't been that great of a position.
It hasn't been that great for him, but I'm pretty confident he's not selling. So I think you're
okay. He's not selling. We can establish maybe he's not selling.
But the main point being he's not buying.
He's
done buying, and his bids, his nonstop, relentless buying was lending the stock so much support. That is gone, and then you have oil prices going down. So now you no longer have a floor here. That's why I traded it off that 57 to 60 forever. And I was talking on the show, and people keep asking, were you buying Oxy? Are you buying Oxy? I'm like, no, because I'm not seeing any filings of Warren Buffett buying any more stocks. So I'm out for now. He starts buying it again, I'll start buying it again. But I don't think he's buying anymore. I think he's full.
What? Please explain to me if it's good oil prices are going down because it's deflationary, or it's bad because we're going into a recession and people aren't using oil.
Well, what if it's inflationary that gas prices are going down, because that means people will have more money in their wallets to spend at other places. So then they're going to go to Target and buy stuff. And then prices at Target are going to go higher. So
They're definitely not going to Dollar General.
definitely not going to Dollar General or Target. They're all going to Walmart. No one's going anywhere but Walmart.
Where is Target? I haven't looked at it for a while.
Apparently, people think
it's trying to fill that earnings gap. It's been trying to do that for a month.
It has two gaps.
Gap into a gap.
Apparently, at least someone thinks that that extra money that people will be saving at the pump won't be going to Costco either, because you had Redburn Atlantic downgrade Costco wholesale to neutral, raises price target. Oh, okay.
Oh, now it's down.
So it was a downgrade, but raises the price target. That's a good way to cover all your bases if you're an analyst. You can say you were right either way. The stock goes down, I was right. I downgraded it. The stock goes up, I was right. Look at my price target. I raised it higher.
They hedge themselves.
Pretty smart.
Yeah. It's
Dennis,
like
have you ever traded
those technicians that get on there and they said, well, if the stock goes up, we think the stock could go higher. If the stock goes down, well, we think the stock could go lower. What the hell is that?
That's great technical analysis.
Yeah, that's great technical analysis. You can't be wrong. 100% right all the time.
I'll come out on a limb here. I'm gonna downgrade Nvidia to underweight in my portfolio, but I'm gonna give it a price target of 150. So we'll check back in a couple weeks, and either way, I think
either way you're gonna be right.
My call will look pretty good.
Or you can say either way you're gonna be wrong if you're glass half empty type of guy. Okay.
Dennis, have you ever traded off a Redburn Atlantic rate?
Yes. Yeah, I know. Atlantic used to, and then there was a merger. Wasn't there a merger between the two analyst firms? It used to be Atlantic. Just now it's Redburn Atlantic. So somebody bought them, or I don't know if somebody bought them, but they changed the name of it. So it's a boutique firm. They move stocks.
Okay.
They all move them. So in analyst ratings, and we do the ranking. It's not Goldman. It's not Morgan. Or some of the big guns. It's not Piper, Wedbush, but they're boutique. There's some small ones that actually move, and some of those are very niche. So some of those actually can move stocks. So if it's downgraded, it's downgraded. You got to just be cognizant of it, because it will move the price.
It did, and I saw it trading up when I first saw it. So I don't know if that was an odd lot. I know Costco's not one of your more liquid after hours stock. Nice resistance. Well, we can't talk about resistance because it's down 247. Wow, yesterday's. This is nowhere. This is a curveball coming right at you. Yesterday's low was 881.70. Let's see what happens at the mark. See if we can get up to 896.49. I call that resistance. And then I don't know. It kind of looks like the S&P chart, the SPY chart, right before we tanked last week. We're trying to get up near all-time highs. You're finding sellers just above it, but they're not really going out and taking it to the woodshed.
All right, it is 8:33. I see our esteemed guest of the day hanging out backstage. We got Sami Abu-Saad coming over from T3. It's a T3 Tuesday. Let's go ahead and give Sami our special pre-market prep intro and welcome, and see what Sami's been trading when we get back. All right, Sami Abu-Saad, happy Tuesday. How are you doing today, man?
Good to be with you. I'm doing great. Thank you.
It's good to have you back on the show. So let's get right into it. We've got a busy week. Of course, CPI coming tomorrow. Last week was also a big week. The market got a little hit last week. How are you trading the downturn? Or what have you been trading, Sami?
So I did trade gaps, so it doesn't matter what the market is doing, because every day is a new list. And the swing trading has been slow, and then I also do earnings. So I try to predict what the company is going to do before it reports. So it doesn't really matter what the market is doing. Actually, I'm in the Oracle today, so I didn't know the market was going to be up. I didn't care whether the market was going to be up or down. So I just, I'm a technician, so I don't really care what the market does for the most part. Some of the long-term positions do care. Like I'm in Tesla long-term, and a couple of days on Friday got hit really, really hard.
That sucks.
Exactly. But otherwise, I don't, sometimes people reach out to me and say, "Are you okay?" I'm like, why wouldn't I be? Like, what's, and they
You're
say,
not
"Oh, the market's
okay.
collapsed."
Tesla went down 3%. I'm selling
Exactly.
the house, selling the car, and moving the kids out. We're going on to a box on the street.
Exactly. So so I'm, doing just fine. I don't care what the market does for the most part.
Sami, let's talk about that Oracle setup, because I find it very interesting that, a lot of traders stay away from earnings because there's more risk. But, you have a strategy, it sounds like, that you go into earnings here. Talk about your Oracle setup and talk about what you did.
Happy to do it. I'm happy to honestly share the secret with everyone, because
We like secrets.
because I don't think it would impact my strategy. The strategy is very simple. If you have a very strong stock, that when you look at the stock, you look at the chart of the stock, the daily chart usually, and you look at the daily chart of the market, it just jumps out. You're like, whoa, this is pretty strong. And the day before earnings, or the previous few days before earnings, the stock gets sold. Then I want to play that stock long, because that means here's the Michael Jordan of stocks, really bullish, but the day or 2 days before earnings, it's getting sold. It means investor expectation is very low for the Michael Jordan of stocks. So low expectations for a really strong stock. That's what I want to do as an earnings play. So I sent out an alert yesterday, and said to play the Oracle long. Was already published before the close. So so I woke up this morning and the Oracle is up 8%. So I like that. But that's the strategy.
So
I'm
you don't
trying to
watch it
find.
after hours when it reports?
I don't. I try not to watch after hours. I had to leave early yesterday, so I wasn't even here towards the close. But I don't watch it in the post market, because I tracked my performance, and whenever I get out in the post market, I'm much better off holding for the open the next day.
Oh, really?
So,
That's interesting.
yeah. So, but basically, the strategy is I'm looking for a really strong stock with low expectations, because then it's easy for the stock to gap up, for the company to exceed those really low expectations. That's basically the strategy. So if you look at the Oracle daily chart, the last 2 days it got sold hard. But if you compare Oracle daily chart to the Qs or the SPY daily chart, you'll see that Oracle has been basic near the all-time high, while the Qs, the Nasdaq, has been getting sold really hard. So Oracle, as soon as I scanned the earnings list yesterday, it stood out right away, because I was like, wow, this is a lot stronger than the market. I wasn't even aware of Oracle. And then I saw that investors weren't too bullish on Oracle. That's perfect. Strong stock with low expectations, easy for the company to end up blowing out those expectations. So that's the idea, basically, the premise behind it. Of course I don't get it all. I don't get it right all the time.
Right.
So
Do you
Getting in
take
is
a
the
full
easy.
size? I just want to keep going on this.
Oh,
Do
go
you
ahead.
take a
I
full
want to
size
get on this too.
position on it because of the risk, or do you like half size the position? Because often, if I'm trading earnings, I go like a half size position, because the move's going to be so significant, that like a half size of my normal size position, because I don't feel like losing 10% on my normal size if I'm wrong. Do you size down a bit on these trades?
No, so I have a completely different sizing strategy for earnings trades.
Okay.
So completely different than the rest of my trades, because you're right. You're expecting them to gap up or down. So the average earnings gap, from having done over 5,500 earnings plays that are tracked, that are published in the Strategic Swing Trader program,
Very
having
cool.
done over like 5,500, the average earnings gap is 6.3%. So I've been doing this strategy since 2017. So 6.3%. So now I know my risk. On average, it's 6% or 6.3 to be exact. And therefore, I can size appropriately.
Okay.
So, Sami, you mentioned that you have a new list every day. I mean, obviously, you're looking for new earnings plays and whatnot, but say there are no earnings on the tables. Where do you get your stocks that are on your list for the day to trade?
Just Yeah, that's a great question. So I
Thank you.
just scanned for gapping stocks, whether it's earnings, news, upgrades, downgrades. PLTR yesterday, was added to the S&P 500. Obviously, that's not earnings, but it was a top watch for me on my gaps list. So that's the beauty of actually trading the gaps list, is no matter what the market is doing, whether it's earnings season or not earnings season, there's always going to be gapping stocks. And so that's the primary focus for me when it comes to day trading. When it comes to swing trading, I try to find stocks that are bottoming. And then the third main strategy that I do is earnings. That's it.
Sammy, we all know getting into a trade is one thing, but getting out of a trade is another, right? So, are you? I mean, is this something where you're like, boom, like open, like ding, I'm out, or do you look at the technicals and the pre-market action? Do you put a stop in? Because getting in is easier than getting out, or do you scale out?
100%. So for the earnings plays, what I do is I wait out the first 5 minutes. I don't do anything. And once the first 5 minute bar closes, I put my stop under it. If I'm long, if I'm short, I put my stop
Okay.
right above it. I've tracked, like I said, over 5,500 trades, and getting out at the open. I can also submit an order right now that will fill me at the opening tick.
Mm-hmm.
That leaves like 40 some percent of the profit on the table. Whereas waiting for the first 5 minute bar to close and then putting the stop under it, I can almost double my profit. So that's what I do. I don't get out at the open. That's easy. That would be psychologically even easier for me to do. I actually wait until 9:35 and I put my stop right under that 5 minute bar's low. That's what I do.
Sammy, someone in the chat's asking for your Twitter account or X account. Are you active on there?
I'm not really active on Twitter. I am not active on Twitter.
Okay. All right. Well, moving on. I guess, I mentioned this week, we obviously have the CPI report tomorrow. Are there any trades or plays that you're setting up kind of into this event? Are there any specific sectors right now that you think are setting up better than others? What's on your list heading in for the day?
So basically, I think there's not a lot of like amazing setups right now, but I really, really like real estate, and I've been bullish on real estate for quite some time. Yesterday, we got triggered into the COMP, which is Compass, I guess. That triggered yesterday. That looks really, really nice. Check out the monthly chart on it. So that triggered for me yesterday. I, of course, like Redfin. I like Zillow. I like some of the mortgage REITs. So NLY, CIM, there's some mortgage REITs that I like, but from the real estate sector, I think I like Comp the most, COMP. There are some other positions that I like I'm in the 20-year treasuries, the TLT, but I'm actually in the leveraged TLT. So I'm in the TMF. That's an open position that looks good long term. And there's other ideas that I have, like eBay looks good. There's a company called FIS. So Frank India Sam, that I like long term. So I have some ideas like that, but in terms of sectors, I really like real estate right now. And if you look at real estate versus check out the IYR compared to the market, I mean IYR is a lot more bullish. Look at the monthly chart, So I'm liking real estate. I like the 20-year treasury. I like a few other stocks that I'm in. But for now, I'm focused on building longer term positions in real estate.
Is that because of rates? Is it because the rates are
It's
going down?
100% going up because of rates.
Yeah.
IYR, that's all rates. So
yeah. So
and you might be looking. Do you? That's what I was going to ask you. Do you track what the Fed's doing and anticipate these moves, or are you just looking like it's breaking out on the charts and the charts telling me the story?
So I used to be an accountant, and I used to analyze an auditor. I used to analyze financial statements for a living. So I'm aware that the Fed is going to be cutting rates, and I'm aware of all these things. But I try to just be a technician, pure technician. So I take these plays because they really look good on the chart. But I'm also in the back of my mind aware that real estate stocks should probably benefit from the Fed lowering interest rates. So so am I doing it because of interest rates? Not really. I'm doing it because of the chart, but I'm also aware that the real estate stocks will probably benefit from lowered interest rates.
So you're just like all this recession news and everything. You're just like that's hogwash, man. We're ripping real estate. We're just just saddle up. There's nothing stopping this market. We're just no recession in sight.
I don't think there is a recession coming. You're right. And I'm a bear by nature. I like to short a lot. But I also, so I don't think that's happening, because when it's a recession, it's immediate. It's not, there's some shock to the system. You don't get, like, I got a call the other day from a relative and asking me if there's a recession, if we're heading into a recession. And I said, I'm not, who knows for sure. I don't think so. But in the back of my mind, I was thinking, if people are thinking about a recession, it's not happening. If a recession usually happens when nobody's expecting it. So it creates a shock to the system. And that's how a recession happens. In this case, everybody's talking about it. I mean, it's not coming. I don't think it is. But the beauty of being a technician is that I can change my opinion as soon as I see that I need to change my opinion. Right now, for me, the chart of the markets is very sloppy. We lost that tight uptrend. It's very, very sloppy, but it hasn't really turned bearish. I know we had a big sell-off recently, but it's still longer term still is bullish to me, but very sloppy, not as before when it was really nice tight uptrend. So that's what I think. I don't think there's a recession coming, honestly.
Sami, tell us a little bit about this ebook that we have available, the Sami's free trend, and it's talking about some of the tactics that you also talk about in your trading course. We've got a link for that ebook in the description.
Well, I guarantee you will like that ebook. It's very, very nice and simple if you download it. Basically talks about how I truly trade. So if it's an uptrend, where I look to play long. If it's a downtrend, where I look to play short. How to find support, resistance, trend lines. So that's what I do. I try to keep it very simple. I don't, if you look at my charts, I have 2 moving averages on there, the 20 and the 200, and that's it. I don't use any other indicators at all. And
what
so
ones do you use?
The 20 and the 200 simple moving averages, and volume, and that is it. And I could do without volume, tell you the truth. And that's all I put on my charts. I try to be I try to keep things really simple, and I try to be true to the chart. Like, if the chart is bullish, it's gonna stand out. If it's bearish, it's gonna stand out. I don't need to have a spaghetti chart. I don't need to have a million things on my chart. You know what I mean? So that's what the ebook is about. It's very neat and simple, and it's like 11 pages long. It's kind of summarizes what I do as a technician. So
Very nice.
highly recommend it, and it's free.
All right,
Price is
well,
great.
we've been on the line with Sami Abu Saad, of course, coming from T3. We love our T3 Tuesdays here at PreMarket Prep. Hit that QR code on the screen or the link in the description to check out that free ebook. Sami, good luck with your trading for the rest of the week. We might see some fireworks tomorrow with CPI, and then don't forget, we got PPI coming the next day. So lots of potential market moving catalysts coming the rest of this week.
Thanks for having me. Take care, guys.
Of course, you too, Sami. All right, guys. Again, shout out T3. We love our T3 Tuesdays there. Always sending us some good guests.
Great
Sami
guest.
Abu Saad is, of course, one of those great guests. Okay, we've got about 10 minutes left here. Joel, I'm going to pop your charts back on the screen. Whoa.
Oh, I just did, and you did. You read my mind.
We're right.
Let's do a little market recap here. That overnight dip was bought. We just got a creeper rally going on in here. Apple off its lows. Coming back into no man's land here. We went hard down through this area on Friday. We're coming back up through it. I don't see any resistance up for about another 37 handles. That's Thursday's high. So if you guys are looking for, that was actually Friday's high. We did pop. So if you're looking, if you're trading S&P centric stocks, maybe look at some of the ranges from Thursday's close or Friday's highs, because anybody that got caught or bought the dip on that, those are potential resistance points.
All right, let's get back to some individual stock news here. We have some news in Southwest Airlines. Southwest Airlines makes major board changes after meeting with Elliott Management. So Southwest announces board overhaul and governance restructuring. So let's see, board. I don't think they've announced who is coming on the board yet. 6 directors to. Let's see. Board intends to appoint 4 new independent directors, potentially including candidates proposed by Elliott Management. So Elliott Management came in here, bought a big stake, is now trying to push out part of the board, and it looks like it's working. Southwest said, "Okay, we'll do a board overhaul." So potential turnaround here in Southwest, but we know these things don't happen overnight. Stock is trading down about 0.2%. Looking at the chart here, I mean, it's actually come off. It's actually come off the.
All the airlines always look the same on the charts, pretty much, and they've been coming back a lot. Delta, look at this one here, down from just going $37 beginning of August up to 43. Just a slow, steady climb. USB a little different, but still fairly steady climb. LUV's been a wicked climb here too. Airlines have been moving. The airlines have been moving back a little bit, but they've been in the gutter, and you just wonder, it seems like every time they have these 10, 15, 20% rallies, they're just more selling opportunities. I still have a small position in American Airlines, and I'm looking, and maybe I just might just cut out and get out of the rest of it pretty soon.
I mean, go ahead, Joel.
How much do we have anything recent from Elliott? Because you got the Elliott pop here. This was the initial surge in June. What do you think the chances are that he bought more in this, in this area, right?
Elliott?
Yeah. Remember, he was in it here. You got the pop. That was the initial pop, and then you got the fade, right? And I was just thinking about that, and that was another reason.
Are they over? I don't know how big they are. If
How
Elliott's
big they
over
are.
10%, then they have to
Yeah.
report every
Yeah.
2 days. Are they over
Yep.
10%? Like, maybe we can just ask.
I think
we
they
need like this chatbot.
ChatGPT.
Yeah, Elliott.
And I was thinking, and the reason I mentioned that is because
10%.
They over 10?
They
It matters. Now it's at 10. It gets tricky because you want to know why? Because they sell just a little bit, then they're under 10, they don't have to report. So they're doing that on purpose. I think it's over 10, so they probably went to 10.
Yeah, so it said $1.9 billion stake. I'm getting the market cap of Southwest right now at $17.8 billion. So that would put them over 10%. But to your point, Dennis, they could have sold a few shares to keep them below that threshold. And we've seen Buffett, Buffett said for a while he didn't want to cross a certain threshold with Oxy to where he was like a majority owner or anything. So he's Buffett does that too with some of his stakes sometimes.
Yeah, well, they're aware of it. There's certain spots. I think that Elliott wouldn't care though if we know they bought more, because they're probably tooting. They're always like, you kind of know it because then they're moving it more. So I doubt they bought more. I think.
Yeah, I say there's more of a chance they bought more than Warren sold any Oxy. But the other thing was. And the only reason that came to mind is Alta got the Warren pop. Remember that? We should start naming all these charts here. This is the Warren pop, and then it kind of faded. Then people weren't too happy with the earnings. What? Hey, Warren doesn't buy up here. He buys down here. He buys down here. So that was the other thing. I mean, these activists.
He's a dip buyer.
Yeah. I wouldn't be surprised. If Warren came in that. But a great point by Jared Jenkins. Jared, how you doing today? Oil down. Good for airlines, right? Isn't that one, besides labor, isn't that one of their biggest expenses?
100%. It's point. Definitely, when you start seeing oil trending down like it is, it's their biggest expense here. So, when I've always, argued even, originally, you got the inverse correlation between oil. Overall, always holding. Obviously, there's different things that can happen, with other factors and balls juggling. But overall, oil trending down, airlines are usually trending up.
And they're cutting their costs too. I've been on a couple flights, and they're like, oh, this is a short flight, a little turbulent, no snacks, no drinks. I'm like, what do you mean? No pretzels, no,
They
whatever.
cut those
And
out years ago. They call
yeah,
it unbundled. What's the word that they call it? They're unbundling it all, so that's why they charge you for bags so they can give you cheaper tickets, which means, well, it's just bullshit because they keep the ticket prices
Dennis.
the same and then they charge you for the bag. So, but they call it, oh, we're trying to help the consumer because some consumers don't want to pay for a bag, so they don't have to bring, or they want to bring a bag, so why do they have to pay for it? So if we unbundle it all, that's like the shirt, that's like, drink the Kool-Aid here because we just want to charge you for every little nickel and dime you to death.
I did a whole week-long trip last year with just my backpack because I didn't want to pay for a bag on Spirit Airlines. And it worked. I just had to stuff a bunch of T-shirts
man.
and clothes in the backpack real tight. It was overflowing on the plane, but it still worked.
Because they give you you got to have that little naps, the little small, like not even like a carry-on, but you got to have like the small little personal item, they call it, which is basically like a kid's backpack that can fit under your seat. Then they don't charge you for that. But they'll start charging us for that too, AB. Eventually, you're going to get charged for that too. They'll find a way.
Dennis, the unbundling, I thought you were going to talk about like cable. I thought you were going to talk about cable stocks because I haven't heard.
No, let's just stay away from talking about cable stocks because those things are always disasters.
Joel, you wanted to talk some Palantir?
Yeah, I put that on there. Elon asked, Palantir. I don't know. A lot of times that fades on, those big, but it's like yesterday, it just felt like, man, that it had that inclusion into the S&P and that small contract. Big move up from 22. Just, keep it going. Let's just keep the rally going. The close from yesterday is 34.60. So you're trading up in the pre-market, man. This thing it's going to have to make its own resistance. Let me see if I can go to the weeklies and dial something up. Oh no, you got to go back a long way in the weeklies. Now, I just keep for right now until we get some kind of topping formation like you did here in August. Let's let it ride. Maybe even just throw a stop, underneath the low from yesterday and let it go. It hasn't been at 35 in so long. Let's see if there's any sellers.
Has it ever been at 35?
Yeah.
Oh, it was back in 2021 in the beginning of the stock.
Yeah.
Yeah.
Yep.
There's no stock that I screwed up more than Palantir. I was on this show saying this was an AI play at $8, and I got out way too soon. And the damn thing's 35 now, and I'm like, how in the hell? My buddy Mike messaged me there yesterday. He's like, you had to call like forever with that $8 Palantir AI play, and I was like, I did. I screwed that up something fierce. This is why you stick it in your long-term portfolio when you think you got a good one, and don't look at it. Trade the long-term portfolio. Screw it all up.
Palantir, a lot of happy retail investors
Not
there.
Me. I watch it go up and think, "Wow."
You're not a happy retail
There's a lot of
investor.
happy retail investors and one not happy DDD. All right, we do have.
Kept thinking we'll get that pullback to 8 again. Maybe it's coming.
Yeah, Dennis, get your order out there.
801, ready for a flash crash.
GTC,
and then they'll bust it on
baby. GTC, baby.
All right, we do have, of course, CPI coming tomorrow morning. We'll have Blue Putnam on to discuss that with us. We'll get those numbers at 8:30. So we'll preview it again tomorrow, but just real quick, just so you guys know what's going on. CPI, the Consumer Price Index forecast, is to come in at 0.2%. That is the same as it was previously in July. But here's the important part, the kicker. The CPI year over year is expected to drop from 2.9% to 2.6%. So inching closer to that 2% Fed target rate. So to me, like, it's great news that inflation's supposed to keep dropping, at least according to this data. But that also raises the bar a little bit for this report that the year over year CPI is expected to drop 0.3% down to 2.6%. So now the bar is set up there pretty high, and we'll see if we end up getting that with the report tomorrow.
Steady Eddie, I think, with their rates. I mean, we're the quarter point cut. Okay, yep, you're getting it. But we're going to bring Blue Putnam on tomorrow. Blue's going to make a return here, who's been helping us follow this inflation picture. So we'll see what the market has in store. But you had the big break on Friday. You're back up. Oil's down. A lot of the commodity prices are down too. So soft number here, and also the PPI on Thursday. So real quick, Tesla is the top pick, not only in Triple D's portfolio, but someone else. I didn't catch the name of
Well, we
Sammy
did
said he's got in the long-term portfolio too. Did you catch that?
Yeah, we did it. It was we did have Deutsche Bank reinstate a buy on Tesla, announces a $295 price target. That hit the tape this morning, but we did not. It doesn't say that it's a top pick at Deutsche Bank, but I did see that headline on CNBC, but it was on one of their little CNBC Pro headlines that you can't get behind without paying for it, which I would never pay for that because I already have everything I need on Benzinga Pro. But again, Deutsche Bank reinstate buy on Tesla, $295 price target. Tesla perking up again, closed up more than $5.
Decent on the technicals again. It's the only thing I've been buying in the last couple of weeks is more Tesla. I bought it 2 or 3 more times again. So again, just I'm dollar cost averaging into the long-term portfolio into Tesla, just because I think 5 years from now it's a lot higher, and I have no idea the path for it to get there. It has headline risk. Robotaxi event may not go well. Maybe it pulls back on that. I'm going to buy more if it does.
All right, well, there you have it. It is 9 a.m. That means it's time for us to wrap tomorrow. I'd ask who we have coming on tomorrow, Joel, but I already said it. I already gave that preview. I took your job today. Well, not the technicals, because I can't do that what you do, Joel. So good. But all right, that will be a wrap for us. Pre-market prep today, of course. Again, big day tomorrow, CPI. So make sure to come back and tune in with us at 8 a.m. tomorrow. We'll be breaking down those numbers live with Blue Platinum at 8:30 a.m. Till then, y'all, stay green. Any final words, Joel, Dennis?
Final words, just keep on going. I'm nothing in here as far as the S&P is going, resistance, and that's what I'm looking at. Friday's highs.
Boom.
I think it's a difficult market. It was a nice bounce back yesterday, and I think we're still a little bit of buy the dip mode here today. Banks are driving the bus here. You got to say, the financials are really strong here today off the Basel stuff. But tech's holding up really well here too. Apple's even coming off the lows. Is this buy the dip mentality out there right now that, hey, the lows are in, and we got a V bottom on August 5th. Could we get another V bottom here? It's not impossible.
All right, there you have it again.
I'm not bullish. I'm not bearish. I'm kind of just sitting here waiting to see.
All right, we'll see what happens tomorrow, and we'll be discussing it and breaking it down live here again, 8 a.m. We'll see you guys there. Of course, we do have live trading starting right up after this. Do not go anywhere. Till then, guys, we'll see you tomorrow, and stay green.